Hey everyone, what's going on? This is CryptoVatsik with your weekly altcoin analysis video. As always, nothing of what you're about to see is considered financial advice. They're just my opinions. If you do enjoy this content, I would really appreciate it if you gave this video a like, and don't forget to subscribe to the channel. Let's get right into it. Okay, today I'm going to be covering Verasity, and it's been a little while since my last video on it, and the current depictions on the chart are from that prior video. And essentially, since that prior video, when we were looking at this overall move, I had predicted that we would get some sort of resistance at this zone and eventually get a much better area of demand if you were looking to get involved longer term. So if you go back a couple videos on Verasity on my channel, you'll notice that I did in fact think we were going to get a chance to buy near yellow. But then in my more recent video, I started to warn traders to not buy into resistance on a potential swing failure pattern, where the common mistake during reaccumulation happens, which is people think that we've bottomed out, they see a nice reaction, they see a new level form with a higher high, and so then they start unloading their capital at the next available dip just to find out that they're now underwater. So there's this quick snippet that I just want to bring up. So here's the first snippet. We'll just expand that. So this is from the more recent video that I covered, where I'd said I'd expect a form of reaccumulation off of our initial accumulation phase, and that I wanted to be very careful buying into our resistance area, which was our red zone above. I thought we would get multiple opportunities to buy area of demand closer to green, and just wanted to forewarn traders and investors to be a little bit more patient and buy the range lows rather than the range highs. Now, another really quick snippet that I want to bring from that prior video, which is where I covered the yellow zone that you're seeing. So we'll just expand this one as well. This is from that same prior video. Yellow was an established area of support over time. And in the video, I covered, yes, we had swept that area with this wick here in March or late February. And though I saw yellow as being that key area that we must hold for this reaccumulation to be valid, I said I would expect a dip into yellow and even potentially a deviation, brief deviation below that zone for a quick reclaim, and then reclaim that bullish market structure. So it's key to remember these are on high time frame levels. This is the weekly chart from that prior video. So these things take time to play out, especially when you're on the high time frame. Okay, so now let's go back to the current chart. You'll notice that's pretty much exactly what we've gotten so far. We pushed up into red. Yes, we made a higher high in comparison to the previous high, what ultimately was a swing fail pattern with a harsh rejection back beneath red zone of resistance. So from that point on, yeah, we got a diagonal here, sure, as added piece of confluence. However, now you will notice we have taken out the prior low here that we made on March 9th. So this is still in a downtrend. But like I said, that yellow zone derived from our high time frame weekly chart is an area that I want to see hold. If we do deviate below it on the daily into these lows down here, then I want to see yellow quickly reclaimed. I don't think this dip is quite over yet. I think we at least get another test of the prior low here. But if we do get that deviation, I want to see a swift reclaim and then quickly reclaim that bullish structure. So another thing I covered in that prior video was in this trading price action that we had here. And let's just zoom into the 4 hour here to get a clearer picture. Okay, so I had marked out this nice shelf that we had formed when we were trading. I believe it was right around here at the time. And here was the expectation that I had for that price action. I said often when you see these rounding tops form, you get a neckline of sorts with a potential deviation and then a nice bounce back above the level for a continued push up. My thoughts in that video was either it was going to be like this, or it was going to be more of a double bottom formation closer to this low over here. So when we go back to the chart, we've got our neckline here. We had the rounding top, and then we got our deviation below the line with a swift reclaim as a support level. We then got some really nice consolidation above that neckline in this green zone here, just chop within a range. However, price starting to compress and tighten underneath that resistance level and underneath the exponential moving average here in the thin gray line for an eventual breakout, retest, and then it was up to resistance. So it was a nice shorter term trade plan that I had noticed at the time potentially playing out. It did in fact play out, but again, that's why you got to go back to that high time frame perspective and just remember that we are still in an overall daily area of resistance that we had not broken. So the odds of this just going back up to this high were pretty slim at the time, or at least the probability was not favorable. The probability of sweeping macro high time frame resistance, such as this high here with a deviation above, was a lot more probable. So I just said stay very cautious. If you're looking long term, you don't want to be buying near red. If you were looking shorter term, that's where this rounding top with neckline reclaim trade was a good trade. Trend line of resistance, breakout, you buy the dip, target resistance. All in hindsight, as usual, looks pretty easy, but that's why you got to trade in probabilities, trade with your criteria, and cut those positions when it's time to cut them at resistance. So the high time frame thesis that I had then thereafter was that we would get a chance at the very least to buy closer to this low and potentially lower within yellow. I would like to see yellow hold. It doesn't mean it has to hold, but for my thesis that we are in a reaccumulation phase on Verasity, my criteria says that yellow is a critical must hold area, and I'll have to change my thesis and reevaluate if it's lost. With high time frame closes below. So on the 4 hour, we could chop around below it on some lower time frame and you go, oh, okay, it's lost. But really on the higher time frame, a couple daily candles below the level is considered a deviation in my opinion. So long as, like I said, we get that swift reclaim and start trading back inside the range, testing resistance again at this diagonal. Now just zooming into the current low time frame price action here on the H4 time frame, it's still bearish. We've got a current range that we are trading within from the high to the low. There is no market structure break as of yet. We've got lower high, and we have failed to break and maintain a close of a higher high in comparison to this lower high previously. There are going to be lower time frame market structure breaks. So for example, on the 4 hour, you get a bearish trend down, okay, and then you get a market structure breaking that prior lower high. On the 4 hour, you can get a retest of it. There's your entry. You target some resistance above, and then you go, great, we've broken market structure. The trend is up. We're showing temporary bullish price action. And then what happens is you get up to that resistance and it starts to fail and it starts to continue back down. And you wonder why. You say to yourself, we've broken market structure. It's bullish. It should be back up. Well, it is until proven otherwise. But you got to remember on the high time frame, okay, on the high time frame, it might just look like this, where market structure is not broken, right? So on the 4 hour, you get a temporary area of relief where you come up, but in the grand scheme of things, the high time frame market structure has not been broken yet. So these are short-term trades here that you want to cut at those resistance levels, and you got to be sharper on your timing because they're likely to continue the trend thereafter. But until we get that high time frame market structure break, okay, so we're talking, let's say, daily and weekly timeframes, where then you get a market structure break on a prior lower high on a downtrend. That is your high time frame area to start looking longs over the coming weeks and months. But you will find lower time frame market structure breaks early on down in these areas on the 4 hour, the 1 hour, and it'll start to look very bullish on the low time frame here, pumping. So you can snipe those entries earlier by going into the lower time frames. But just use added confluence, always zoom out for perspective and get that clear high time frame picture of really what's going on. Okay, so just back to the 4 hour here. We've got this range. If we hold EQ and we start consolidating at the range high and we push, sure, maybe we push up into a prior area of resistance here. That would be a decent trade, either on the confirmed breakout up to that area, 13% trade. If you get in closer to the EQ, assuming a breakout of the range high, it's a bit of a 20% move, all the while remembering on the high time frame, the trend is still down. So if we do get something like that, we start getting a little bit of a rally, we push into resistance. I do expect us to come back down still. And like I said, get that deviation below yellow for a higher time frame trend reversal. And then our high time frame target or objective becomes to reclaim this key SR level here. Let me just get rid of red. This is the key SR that I want to see first reclaimed that would show a sign of bullish strength. Yellow is the reaccumulation validation, okay, that this is reaccumulation. In my opinion, others will have other validations for what they think, the phase of the cycle that we're in is, rather than a level that I would trade necessarily as a support or resistance level. Whereas in green, that is a key support resistance level that I would trade against. So that to me on a high time frame is the objective. We want to get above there to start talking about a rally to take out this macro lower high. Until then, it's still just in a downtrend. But this key SR level here was formed back here in this area of consolidation near that range low, not quite, but near it, all the way to the origin of the breakdown here that we got on May 1st or April 30th. Okay, so that was 100 days of a liquidity zone that was traded as either support or resistance. So for whatever reason, I'm sure in the volume profile, you would see it as well. Okay, so I just brought up the volume profile here. It's just another way of looking at where the volume comes in at certain prices on an asset. And you'll notice, bang on, here we go. There's the volume right essentially right in that zone, okay, that I had marked out in green here, okay? So price likes to trade at that area for whatever reason. The market sees it as a important level. And I'm sure if we go back to previous price action, there's some areas of confluence or just areas of interest as well. So if we take it, it's just above 0.006. Okay, so a couple of highs here, not really this high, and then a couple of lows here, sure. So it's just a structural level to be, I think, very aware of. Let's get rid of that now again. So back to the chart, 100 days, okay, back to that zone, reclaim it, which I think we will. It's just a matter of when. If we lose yellow, which is my control area for that reaccumulation phase that I think we're in, if we lose it, it just prolongs the timeline. Essentially, you got to start with the clean slate, clear the chart up, come back at it with fresh eyes. If we are able to hold yellow in some sort of form that looks like this, then the thesis is valid. We can chop around in here for as long as it wants, so long as we don't break the low with high time frame closes below, and we're able to just hug that range low essentially. Then we just start looking up, okay? We take out previous lower highs, we reclaim that structural key SR, like I said, then we start talking about these highs up here. And then of course they're in a rally further up to even higher highs, with the next one being at about 1.5 cents on a macro level. Let's take a look at the daily. So yeah, basically we got the 1.5 level up here I got marked out. This one, which I had marked out as well at 009 before we got this full move. And obviously there's a ton of demand on this asset at the time. People got very bullish and it deviated quite above that level. I think that there was a lot of excitement with this that will come back to it once the market is ready, meaning once the market is ready for the next bull cycle, really. All right, guys, I think that's about it for this video. I really hope you enjoyed it and took something away from it. If you did, or if you have questions or other thoughts, just let me know in the comments. And again, if you liked it, please give the video a like. It really supports the channel and I do appreciate it. And if you're new, of course, don't forget to subscribe to the channel at CryptoVatsik. You can also follow me on Twitter at CryptoVatsik. And as always, we'll see you next time.